Are you having trouble building your assets? You're not alone. Charlie Munger, Warren Buffett's longtime business partner and confidant, already has $1 billion in his account. And if there's one rule he knows, it's that the first $100,000 is hard, but the rest is easy. But why is that? In this video, we look at Munger's wisdom on building wealth and uncover why the first $100,000 is a challenge and how you can overcome it to get real results on your financial journey. So if you're ready to take charge of your finances and build real wealth, stick around until the end because we've got Munger's best advice. A slow start. The first $100,000 is hard to accumulate because it requires discipline, patience, and consistency. Building a fortune from scratch takes time, and it's easy to get distracted by temptations or setbacks. It requires a lot of sacrifice, such as cutting back on unnecessary spending and investing savings in the right places. It also requires a lot of self-control, as you should avoid impulsive purchases and instead focus on long-term financial goals. However, once you have a solid foundation of wealth, it becomes easier to continue growing it. The power of compound interest begins to work in your favor, and you have more opportunities to invest in profitable ventures. Also, as your net worth increases, you have more resources to invest in people and opportunities that can help you grow your wealth. For example, you can invest in a business or hire a financial advisor to help you make better investment decisions. How to get to $100,000? Raising $100,000 can be difficult. One of the most popular methods is crowdfunding. Sites like Kickstarter and Indiegogo allow individuals and small businesses to raise money from a large number of people, usually by pre-selling a product or service. You can also seek angel investors or venture capitalists. These individuals or companies provide money in exchange for a stake in the company. This can be a good option for companies that have a solid business plan and are ready to expand. Another way to raise money is through grants. There are a number of private and public organizations that provide grants to businesses, nonprofits, and individuals for specific projects or initiatives. These grants can be a great way to raise money without giving up your equity. You can also raise money by taking out a loan. Banks and other financial institutions offer a variety of loan options, from small business loans to personal loans. However, you should keep in mind that loans must be repaid with interest, so this option should be taken with a grain of salt. Finally, you can also raise money by selling assets or equity. This could include real estate, stocks, or even part of your business. This could be a quick way to raise a large sum of money, but it's important that you consider the long-term implications of selling assets or equity before going this route. In short, raising $100,000 can be done in a number of ways. The most common are crowdfunding, angel investors, or venture capitalists, grants, loans, and the sale of assets or equity. Each method has its own advantages and disadvantages. Therefore, it's important that you carefully consider your options and choose the one that's best for your specific situation. Understanding your investments. Munger also stresses the importance of understanding the company and industry you're investing in. He suggests focusing on a few high-quality investments that you understand and then sticking with them for a long time. Munger strongly advocates the concept of the circle of competence, which states that investors should only invest in companies and industries they understand. Munger advises investors not to try to predict the future and instead focus on the present. He believes that investing in a company you understand and believe in can increase your chances of success. Munger also stresses the importance of taking a long-term view when building wealth. He suggests that investors should focus on building wealth over a period of decades rather than trying to make a quick profit. Munger believes that with long-term perspective, you can avoid the short-term fluctuations of the stock market and instead focus on the company's underlying value. Diversification and wealth accumulation is key. He suggests that investors should not put all their eggs in one basket and instead spread their investments across different industries and asset classes. By diversifying, you can reduce the risk of losing all your money in one bad investment and instead spread the risk across multiple investments. Another important aspect of wealth accumulation, according to Munger, is avoiding unnecessary complexity. He suggests that investors avoid complicated financial instruments and instead focus on simple investments that they understand. Munger believes that investors who keep things simple can reduce the risk of making a costly mistake. In addition to investing, Munger also stresses the importance of living a frugal lifestyle. He suggests that you can increase your chances of building wealth by living below your means and saving as much money as possible. Munger believes that by living a frugal lifestyle, you can resist the temptation to spend money on unnecessary items and instead focus on your long-term financial goals. Munger's best investments. Charlie Munger is a legend in the investing world, and for good reason. His investment decisions have helped make Berkshire Hathaway, the company of which he's been vice chairman for more than 50 years, one of the most successful and recognizable names in business. He's a business partner of Warren Buffett, and together they've built an empire that remains a force to be reckoned with. But what makes Munger's investments so special? Let us take a closer look at some of his best investments. One of Munger's most notable investments was his early investment in Berkshire Hathaway. In 1962, he recognized the potential of the struggling textile company and decided to take a chance. Little did he know that his decision would lay the foundation for one of the most successful companies in the world. Munger and Buffett then began acquiring other companies and building the Berkshire Hathaway we know today. The importance of this investment cannot be overstated, as it has provided investors with returns that are nothing short of extraordinary. Another great investment for Munger was Coca-Cola. In the 1980s, he recognized the potential of this iconic brand and decided to invest. Munger praised Coca-Cola for its strong brand, which he considered one of the most valuable assets a company could have. And he was right, because Coca-Cola has been a consistently profitable investment for Berkshire Hathaway. It's not just the returns that make this investment so special, but also the fact that Coca-Cola is a household name that has stood the test of time. Munger also had a successful investment in Wells Fargo. In 1989, he and Buffett saw the potential of this financial giant and decided to invest. Munger praised Wells Fargo for its strong management and ability to consistently generate profits. This investment has proven profitable for Berkshire Hathaway and demonstrates Munger's ability to identify companies with strong fundamentals. Munger's investment in American Express is also worth noting. He and Buffett invested in the company in the 1960s, and it's been a profitable holding for Berkshire Hathaway ever since. American Express, like Coca-Cola and Wells Fargo, has a strong brand and a consistent ability to generate profits. Munger's ability to recognize these type of companies is a testament to his investment acumen. Other notable investments by Munger include the Walt Disney Company, Procter & Gamble, and Geico. These are all companies with strong brands and a history of generating consistent profits. Munger also invested in several smaller, lesser-known companies during his career, many of which have also been very successful. Munger's investment strategy focuses on finding companies with strong brands, good management, and a constant ability to generate profits. He has a good knack for finding companies that are not popular in the market but have strong fundamentals. He believes in the power of compound interest and the importance of patience in investing. Munger's approach, along with his long-term partnership with Warren Buffett, has led to a track record of exceptional returns for Berkshire Hathaway and its shareholders. It's not hard to see why he's considered one of the greatest investors of all time. Where to invest? Once you have accumulated $100,000, you can consider different investment options. Which option that's best for you depends on your financial goals, risk tolerance, and time horizon. Here are some options you can consider. Real estate. Investing in real estate is a great way to earn passive income and gain significant value over time. However, you should keep in mind that real estate investments can be capital intensive and require a lot of time and effort to manage. Stocks. Investing in the stock market can promise high returns over the long term. It's a good idea to diversify your portfolio by investing in different types of stocks, such as blue chip stocks, value stocks, and growth stocks. Bonds. Bonds are a fixed income investment that can provide a steady stream of income. They are considered less risky than stocks, but typically have lower yields. Open-end mutual funds, or ETFs. Mutual funds and ETFs offer a way to invest in a diversified portfolio of stocks, bonds, and other assets. They're a good option for investors who want to invest in a professionally managed portfolio and need more time or expertise to select individual stocks. Alternative investments. Alternative investments such as private equity, venture capital, or hedge funds offer the potential for high returns, but can also be more volatile and less liquid than traditional investments. These types of investments should only be made after thorough research, and if you have the necessary knowledge and experience with these types of investments. The wisdom of Charlie Munger reminds us that the first $100,000 is the hardest to earn, but once you reach that milestone, the rest becomes much easier. So don't give up on your dreams, and keep going. If you enjoyed this video, please click like and subscribe to our channel for more valuable insights and tips. Thanks for watching.